Okay. So every Wednesday morning, I'll be live to answer questions between 7:30 and 8:30. And I'll stay longer if need be. I'll stay online as long as need be in order for you to get your questions answered. So this is an introduction to financial accounting. We'll talk in a minute here when we go over the Chapter 1 PowerPoints as to the difference between financial accounting and managerial accounting, which is what makes up your Principles of Accounting 2. The book is Corporate Financial Accounting by Warren, the 15th edition. There is a access code if you buy it new, or if you purchase the Cengage Unlimited. If you've got more than one class that is doing Cengage books, you can do that. That's going to give you access to online through Blackboard a series of practice problems that would be highly beneficial, but they are optional. So if you buy a used book and it doesn't have that access code, you will not be at a detriment. So entirely up to you whether or not you want to use that access or not. It will benefit you. It will give you greater understanding of the material, but it's not required. I'll be teaching you the material myself. So we're going to have 3 midterms and a final exam. That's going to make up the bulk of the points available. So that's, each midterm is worth 100 points and the final is worth 100. So that's 4 of the 500 points in this course. There is a series of quizzes. I have not put quizzes up. I will be putting up today a series of online quizzes. Normally I give quizzes at the beginning of each class. So these will be a combination of true, false, and multiple choice. I will be putting those up today so you can do that and get those and maximize those points. And then there'll be a spreadsheet assignment once we get through chapters 4 and 5. I'll introduce, and then that will be due the weekend after Thanksgiving, towards the end of the class. All right. So makeup test probably won't apply to this class because everybody will be getting the exam on the exam day and having all day to do it. But if for some reason you don't do the exam while it's open and available on that test day, then I'll give you a makeup exam, but you'll begin at a grade of 89. You'll get penalized. All right, and then attendance, you're supposed to be here. So we're going to start out with chapter 1 today, and then on Wednesday we'll finish that up. We've got 2 weeks until Labor Day. And then next week we'll be doing chapter 2, and then we'll have the Labor Day holiday, and that following Wednesday on September 9th. So even if you don't come this Wednesday on the 26th of August, and then the following Wednesday on the 2nd of September, do plan on coming September 9th, because I will be going over the midterm on that day, and your midterm is going to look basically the same as what I review, with the exception of you'll have a new set of numbers. You will not have the same set of numbers, but the problem and how to go about solving it will be the same. I will not be recording those classes, whereas I will be recording any of my Wednesday online office hours, under the assumption that if somebody comes on a Wednesday and has a question, probably more than one student will have the same question. Those will be recorded, but the reviews will not. So you need to show up live in order to get the benefit. And that will be the Wednesday after Labor Day. And then that following Monday, I'll launch the first midterm. As I said, it will become available at 7:30 in the morning, that Monday, September the 14th. You will have all day to finish it, and it will be due at midnight that same day. And you'll be submitting them on Blackboard. So you'll go to Blackboard to the midterm 1 tab that will be on the left-hand side, and pull down the PDF of the midterm. Actually, it'll be an Excel file so that you can enter the data straight into the Excel file. And then you'll upload that once it's finished back into Blackboard to submit the exam. Then we'll go into the rest of September will be chapters 3, 4, and 5, where we'll introduce what is known as the adjusting process in the accounting cycle, and then talk about variations of 2 of the financial statements. One is a classified balance sheet, and then a multi-step income statement. So we'll do both of those. And then we'll do another review at the end of September on the 30th for exam midterm number 2. And that's the first half of the course. So that's a very macro view. It's overall focusing on financial statements and the accounting cycle, how we go about processing accounting data. And then the second half of the course is really kind of a micro view. We start looking at individual accounts. We'll start off with inventories, and then we'll do long-term fixed assets, property, plant, and equipment. That will make up the basis of the 3rd midterm, late October. And then in the home stretch, we'll do financial statement analysis. There'll be an extra credit assignment available based upon what we do in chapter 14. We'll do the last of the 4 financial statements, which is the statement of cash flows. And then we'll do liabilities, bonds payable. And that will lead us into the final exam. And then the final exam is scheduled for Monday, December 7th. And that will be the course. Any questions on that so far?
You did say we do not need the book, correct?
You do need the book. You don't need the access code. So if you can find the book used, you do need the book, because you do need to be able to go in and look at problems in the back of the chapters. And then in a couple of chapters, most especially this bonds payable, your book is going to have present value tables in the back in the Appendix A that you need to have access to. So highly recommend getting a accounting book, by this Warren character. So, but whether or not it has this brand new out of the bookstore and it has this access code or not, that's an optional thing. Okay.
I have a question.
Yes.
Okay, so for exams, do we have to take it all in one sitting, or can we? Yes.
No, you can. No, you have all day, so you can start it, and then, and they're open books, so I don't use the respondus lockdown, and it's not timed. You just have to finish it in the same day.
Okay.
So you'll download an Excel file that will have the problem set in it, which you can print out if you want to, just to have handy. And then there'll be 3 additional tabs in that file. One with a journal page for you to write journal entries into, which doesn't make much sense now, but will by the time we get to that part. It will when we go over chapter 2. And then you'll have a set of T accounts for you to post those journal entries and come up with account balances. And then the account balances, you'll do an income statement, a statement of retained earnings, and a balance sheet. And then once you have all that completed in that same file, you'll upload that file, that saved file, back to Blackboard to submit.
Okay, cool. Thank you.
Sure thing. Any other questions on the course outline? Okay. So this is the Blackboard site. And then when you click on the Blackboard site, this is where it lands. It lands in this chapter summary. And then on the side here, the outline that I just got finished reviewing is right here. All the university policies and students' resources are here, as well as the disability statement. This is your instructor. That's me off of Cozumel, along with all my detail down here. And then we have the Excel assignment, the final exam, and the midterm are posted right now, as well as the extra credit analysis from chapter 14. But they'll be included here in the next week will be midterm 1 and midterm 2 will be populated in this area. So chapters, under each chapter, there is your See Now registration, which if you just go down to this chapter 1 assignment and you click on it, it launches a Cengage resource, which for you, it tells me to go ahead and start the assignment. For you, it's going to come up with either enter the access code from your textbook, or it has a 2-week window. So all of you have access to all of this for the first 2 weeks, whether or not you buy the access code or not. And then you can start the assignment. And so I recommend doing the chapter 1 and chapter 2 assignments while it's free, because it's just extra credit and it will give you, some additional insight into the material. It also has an ebook. So that's the cover. This is the Cengage textbook that we're going to be using. Let's see. Do that. And so it has all the chapters in here and all the materials and all the problems and the like. And I'll be recording some material in that also. And then it has some chapter 1 classroom examples and as well as the chapter 1 PowerPoint. To this, I will be adding today the recording from this session. And then we'll be going, and I'll be supplementing this material, which you'll see, because we went online last spring break. So if we go to the second half, inventories, you'll see there's new recorded material. And so that has some updated material, and then it has a lecture and a problem. These lectures and problems are from the classroom. Back when I taught in the classroom, I had this little device called a swivel that would follow me around, would pivot and record me as I talked and did problems on the board. So in each of these chapters, you have these lectures and problem sets from the classroom. So you can watch those. They're 45, 50 minutes long. You can fast forward and back them up. They're all on YouTube, so they're accessible on your phones and your iPad and the like. But I'm also recording new problems, and I will have them for chapters 1 through 5 posted starting this week. I'll be uploading those, so look for that folder, and actually I'll move that folder to the top so it's a little bit more apparent. This I don't need. Get rid of. So that's the chapter material. And like I said, there's one for each chapter, there's 1 through 6, and then 9, 11, 13, and 14. And all of that is readily available here on Blackboard. Questions on the Blackboard site? No? Okay, then let's introduce chapter 1. The PowerPoint slides. Let's see this one right here. There we go. Okay. All right. So a business is any organization which is going to produce a good or service. For purposes of this class, we're only going to be focusing on for-profit businesses. So these are all businesses that are going to produce a good or service from raw materials and labor in order to make money for profit. So those types of businesses include Delta Airlines, Walmart and Amazon, Ford Motor Company. All of these are well-known for-profit entities. Delta and Walt Disney provide a service, either in transportation or entertainment. Walmart and Amazon take finished goods that they purchase from manufacturers and sell them to end users. And then, of course, Ford and Merrick, in the pharmaceutical industry, manufacture from raw materials their own products. So what accounting does for business is we're an information system. We process vast amounts of data, summarize, classify that data in an accounting system, and then we summarize that data into a series of financial statements that provide necessary information for users to be able to make decisions. And those users can be a variety, both internal and external. And we'll talk about that. Oops. So internal are managers and employees that run the business on a day-to-day basis. So they all need accounting information in order to make decisions like hiring or laying off, going into a new product line, whether or not to launch a new marketing campaign, and further down the road, whether or not that campaign was effective or not. So all of those are internal users of accounting information. External users are investors. Investors need to make buy, hold, and sell decisions. Should I buy some stock in this company? Should I hold on to the stock that I already own, or should I sell it? They also, government is an external user, both for regulatory purposes and for taxing authorities. Customers, whether need to look at your information, your financial statements, in order to ascertain as to how financially stable you are. You don't want to start relying on a business to provide you with a highly critical component to your manufacturing process if they're unstable or weeks away from going bankrupt. So those are all the types of users that we use. And then we go through and classify business transactions, and we'll go over what those are as we go through this chapter and into more detail in chapter 2. And then we summarize that data into a set of accounting financial statements. And those basic financial statements consist of an income statement that it shows all the revenue as well as expenses incurred in order to generate that revenue. It then calculates profit, whether or not we made money or lost money on our endeavors. Then we have the statement of retained earnings. Retained earnings is profit from prior periods that have been left in the business, not distributed back to the owners in the form of dividends. And then that statement goes into a balance sheet. So the retained earnings balance is one of the financial statements accounts in the stockholders' equity section of the balance sheet. And the balance sheet is a financial depiction of what is known as the accounting equation. And we're going to go over that here in a second. But the accounting equation, to introduce it, is assets, which is everything a company owns in order to conduct their business. So that's all their cash, all their accounts receivable, all their property, plant, and equipment, all their inventory, any intangible assets like patents, trademarks, or copyrights. And then assets are equal to liabilities, so everything that the company owes to external users, and then plus stockholders' equity. And we'll talk about that. So this course is focusing on financial accounting, but another branch of accounting is managerial. And managerial accounting is for internal users only. And those are things like profit margins on specific assets, specific products, production cost data on how much it costs to produce all of our various components that we turn around and sell as a final finished good, or how much does it cost to provide the services that we're selling. So all of those are done in managerial accounting. Financial accounting is this course. That's the focus of this course. And this is for external users. So we produce a common general purpose financial statement so that the income statement from one entity is going to look very similar to an income statement from another, so that investors, for instance, can compare businesses in order to make a decision on which one that they want to invest in. So all of this requires lots and lots of labor. Accounting is in high demand. I normally ask, and I'll put out a poll question as to how many of you are accounting majors, but I'll ask that here in a little bit once I get finished recording. But accounting is a highly lucrative. Most of our accounting graduates have a job upon graduation. Many of them get paid internships while they're finishing their degree. And we place a healthy percentage of our grads in public accounting, both Big Four public accounting, consisting of KPMG, Ernst & Young, Deloitte, and Price Waterhouse, as well as major employers, USAA, Rackspace, Valero, Tesoro, individuals here in town. So the careers are either in public accounting, which is the public accounting firms, those are the CPA firms, or private, which is the USAAs, Rackspace, etc. So there's a lot of opportunities. We're one of the only business majors that have a state licensure. So just like doctors and dentists and physical therapists and the like, lawyers, we are licensed by the state of Texas. All of the accounting faculty at UIW, all 6 of us, all have CPAs. We're all professionally certified, and that's the only one. There is a federal licensure for stockbrokers that finance majors can get, but the only state licensure is accountants. These are annual salaries that are a little bit dated, but private entities normally start between 40 and 50,000 for an accountant. Public accounting will start in the mid-upper 60s. For the large firms, as well as bonuses, if you pass the CPA exam in their first year in one of the big 4 public accounting firms, you get a 10 grand bonus, and so that's all quite lucrative. All right, all of financial accounting is governed by a set of rules. Managerial accounting, there are no rules, but in financial accounting, we have a strict set of rules. And those rules are generally accepted accounting principles, GAAP. GAAP is the oldest of the accounting principles in the world. It dates back to the early 1900s, the 1920s, 1930s. It is a collection of standards, principles, and assumptions that are put forth and approved and periodically modified by the Financial Accounting Standards Board. This is an independent board made up of governmental educators and public accounting and private accounting executives that sit on this board. They're appointed by a government agency, which is the Public Accounting Oversight Board, PAOB, and that is governed by the Securities and Exchange Commission. So we're a pseudo-government, but primarily independent board that issues generally accepted accounting principles. And we're the most robust principles. The U.S. GAAP is made up of over 40,000 pages of standards and interpretations. Whereas in comparison, the international standards, which is governed and issued by the International Accounting Standards Board, has about 4,000 pages. So we're very robust, very, very old and mature set of accounting principles. So for accounting to be useful, and as I said originally, it's for users to be able to make decisions. So to take accounting information and make an informed decision, it overarchingly must be relevant and have a faithful representation. So it has to impact the decision making, and it must accurately reflect the actual economic activity and condition of the entity being presented. So in order to be relevant and faithful representation, it must be comparable. So you must be able to compare this year to last year. You must be able to compare this company to another company. It needs to be verifiable, which is why all public traded companies, anybody who is selling a stock or bond on a public market, must be independently audited by an independent CPA firm. It must have timeliness. They need to come out quick enough to be able to accurately reflect what's going on in today's environment, to be able to make a decision today. And then they need to be clear and concise so that the user can understand it. We're not producing financial statements for everyone, but we are providing them for the educated users. So someone like yourself, when you get done with this class, you will have the basic knowledge needed in order to be able to look at a set of financial statements and come up with a basic understanding of what it is they say. So assumptions underlying all of this is monetary. So we use a common monetary unit. Everything in this class and everything in the United States is based upon the US dollar. If you were to go and pull up a financial statement for a European entity, then that would be under the euro, Japanese under the yen, Chinese under the renminbi. So it's all of the financial statements are expressed in one single monetary unit. It's on a time period. Many companies use a calendar year, which is a January 1 to December 31st. However, a lot of companies use a natural business year. Companies such as Walmart and Target use a January 31st year end so that they can have the post year end sales after the holidays included in the financial statements. The NBA ends on July 31st so that it's the end of their championship season. The NFL is a end of February, the 28th or 29th, once again, in order to incorporate the Super Bowl into the fiscal year. So it varies, and when we get to the financial statements, these are all readily available at the top. It will tell you exactly what year end or month end or quarter end the financial statements are reporting. So business entity is that this is a single business. It is separate from its owners, so there is no cross matching of assets or liabilities. It is just the assets, liabilities, and equity of the entity. It is just their income and expenses, revenue and expenses, and it is not intermingled with entities that are outside of the conglomerate. So are there three major types of businesses? Sole proprietors make up over 70% of the entities in the United States. They are very simple to organize. They don't require any legal documents. They don't require permission from the state. You may require a license from the city, depending upon what it is you're doing. These include, landscapers and lawn mowing and car washing businesses and delivery businesses and small entrepreneurs. One individual is involved and owns all of that. They report all of their income and expenses for tax purposes on their individual tax return. So it all goes into the 1040 individual tax return on a Schedule C. And it's the simplest thing that you could decide today that you're going to, say, for instance, start tutoring accounting and charging classmates a nominal fee to tutor accounting. And boom, you're a sole proprietor. That's all it took, was the decision. Partnerships, if your business gets more complex and you require some help, then partnerships is the next one. This is owned by two or more individuals. Architectural firms, lawyer firms, CPA firms are all partnerships. They can have limited liabilities. You could go get a state licensure, like a state charter, and limit your liability just like corporations. They are split along the partnership agreement. A lot of them are 50-50, but they could be, 60-40, even 90-10, depending upon the partnership agreement. And then corporations. Corporations only make up 20% of the businesses, but they generate 90% of the revenues. These are Apple, Alphabet, Ford, American Airlines, Microsoft, all of these are corporations. Corporations are legal entities. They can do anything that an individual can do in the United States. They can be born, they can die, they can marry and combine two corporations into one. They can own real estate. They can own patents. They can do anything an individual can do, with the notable exception of voting. They're not allowed to vote in the elections. They're organized by the state. They can be either closely held or publicly traded. And publicly traded are those that sell their stocks, their shares of ownership, on a open market, be it the New York Stock Exchange, the NASDAQ, the Hong Kong Exchange, whatever. All right, so those are the forms. So the accounting equation, everything that is owned by a business in order to conduct their business is called an asset. Assets are equal to the debts of the business plus the rights of the ownership. So this is the accounting equation. Assets equals liabilities plus stockholders' equity. That is what is going to make up the balance sheet. And we'll talk about that here quickly. So everything a company owns is equal to the liabilities, and what's left over is their equity. So what we do in the accounting equation is we analyze business transactions. A business transaction is one like this. Chris Clark opens up an account in the name of NetSolutions, which he has gone out and incorporated in the state and received a charter, and then has issued and started up this new corporation. So we have a business transaction. We have an asset that has increased. Cash has gone up by $25,000, and stockholders' equity has gone up by the same amount. So the accounting equation balances. The assets totaling $25,000 equals the liabilities, which is 0, plus stockholders' equity, which is $25,000. Then a few days later, he goes out and buys a plot of land. This does not change the right side of the equation. The stockholders' equity remains unchanged at $25,000, but it reclassifies by decreasing one asset and increasing another. So cash goes down, land goes up. Then we buy some supplies, office supplies, and we agree that we will pay you in the future. So we've opened up an account with an office supply vendor, the store, and we've ordered $1,350 worth of supplies that have been delivered. So now we have a liability. So our right side of the equation now totals the liability at $1,350 plus the $25,000 in common stock for a total of $26,350. We have $5,000 in cash. We have this new account called supplies at $1,350, and then the $20,000 in land. The equation still equals. So the way a for-profit entity makes their living is they sell either a good or service to their customers in the form of revenue. So this NetSolutions, this internet company, has provided some services to their customers, and they've received payment for those services in the amount of $7,500. So that goes to the cash balance, bringing it up to $12,500. And under stockholders' equity, we have this new accounts, fees earned, which is the revenue account for this company. So revenues from services are traditionally called fees earned, or it could be commissions earned if it was a real estate brokerage house. Revenue from the sale of merchandise is sales. And then a landlord would have rent revenue, and an investor would have interest revenue if you go out and you invest in bonds. An accounts receivable is an asset of monies that are owed from a customer to the entity. All right, that's accounts receivable. So if instead of paying us in cash, if we invoice a customer, those are accounts receivable. So then, in order to generate these revenues, we're going to need to incur some expenses. We may have employees that we pay wages to. We may rent some equipment or a office space. We could pay utilities for electricity, water, gas, internet service, cable, and then other types of various expenses. So at the end of November, this same company goes out and it pays to their employees $2,125 in wages and salaries, pays their landlord $800, pays CPS utility $450, and then they had $275 in miscellaneous. This could be meals, it could be entertainment, it could be gas for the car, could be postage, any that is not classified in another type of account. Then, back when we bought the office supplies, we promised to pay the office supply vendor what we owed them, and we're making a partial payment on that debt of $950. So we pay that in cash, and it reduces our liability from the $1,350 down to $450. And then we go in at the end of the month and we count up the number of supplies that we have left. And we determine that we have 550 still on the shelf unused. So that means we used up $800 worth of supplies. And that is a supplies expense, another type of expense incurred in order to generate the revenue for the month. And then the very last transaction is that we paid back to Chris in the form of a dividend, $2,000. That's how shareholders receive their money out of corporations, a distribution referred to as dividends. So if we summarize all of this, we see that the accounting equation is still balances, still $26,450 worth of assets spread over three types: cash, supplies, and land. We have one liability, $400 balance in the accounts payable. And then in stockholders' equity, we have common stock, dividends, which goes to the statement of retained earnings. And then the income statement made up of fees earned, wages, rent, supplies, utilities, and miscellaneous expenses. So all of those are stockholders' equity because the revenues and expenses make up net income, and then taking net income and deducting dividends gives you retained earnings. We're almost finished. And then I'll open it up for questions. Financial statements, as I mentioned earlier, make up four: the income statement, that your book calls it the statement of stockholders' equity. I'm going to refer to that statement as the statement of retained earnings. It's a much more simplified version of that stockholders' equity statement. The balance sheet, those three are going to be the basis of midterm 1 and 2, and during the first half of the course. At the end of the course, we'll go over a chapter for the fourth and last financial statement, which is the statement of cash flows. What each of these statements do is the income summarizes the revenues and expenses and calculates net income, the profit that we generated. If we sell more revenue than we incur expenses, we make a profit. If our expenses exceed our revenues, then we have a loss. Then the statement of stockholders' equity takes the existing balance of stockholders' equity, adds in net income, subtracts dividends, and that gives us the ending stockholders' equity. And then the balance sheet is simply the accounting equation. It's a listing of all the assets, liabilities, and stockholders' equity at the end of the period. All right, so as I said, the income is a summation of revenues and expenses. The statement of stockholders' equity is just the statement of retained earnings is just the retained earnings plus net income minus dividends for ending retained earnings. And then lastly, the balance sheet is the assets, liabilities, and stockholders' equity. Okay, so that is the, let me see here, Chapter 1 lecture. Now I'm going to be posting this so that you can look at it over and over, and then on Wednesday, if you've got questions, what the problems are going to be is, I'll give you an example. Right now, let's see here. If we look at Chapter 1, let me pull that up. Problems. So it's either analyzing transactions. So here's problem 1. So, you opened a business bank account with a deposit of $60,000. So that's a debit. That's a increase in cash and an increase in common stock. Then bought service office supplies on account, received cash, paid rent, paid creditors. So these transactions in a blown out accounting equation. So a column for cash, column for accounts receivable. And I'll solve this problem, record it, and post it by Wednesday for you to be able to look at and review. So here's a financial statement. So it's giving us the end of the year balances between assets, liabilities, and stockholders' equity, as well as the revenues and expenses. And it's asking us to create an income statement, the statement of retained earnings, and the balance sheet. So we'll do that. And here's another one that is just produced the same thing from that columnar. So all of the balance. And I'll do these first 3 problems, record them so that you can look at them. And that really is what the basis of your homework, which I, once again, encourage all of you to do the homework assignments for Chapter 1 because it's free. So going in and analyzing business transactions, doing some financial statements and the like. All right. I know it's a lot for 7:30 in the morning. You all look a lot more tired than you did when you first got on. I apologize. There's nothing exciting about accounting, but it is a much needed, the number one business reason that businesses fail is poor accounting practices, according to the Small Business Administration. So if you've ever got interest in owning your own company someday, then you're going to need to know some basic accounting. So that's that. So let me stop sharing my screen. And is there any questions on this? Okay, let me see. I've got a couple of chats.
That was just me. I was asking questions earlier.
Oh, okay. Yeah. Do you have to get the unlimited? No, but if you've got more than one course that is using a Cengage book, then that's your best bet. Is rather than buying the individual books, either in an actual book, physical book, or an ebook, then buy the unlimited for the semester. Does anybody know how much does that cost? If you guys click on Blackboard, it'll give you the pricing. It's like 30, 40 bucks or something? Does anybody know? If you click on one of my assignments from my Blackboard site, it will give you purchase options. And you can also buy it from the bookstore. It's not much for the semester. So if you do have more than one, because Cengage is used in English and is used in other subjects other than business, then your most economic option is to go through and buy the unlimited, and to give you access to all of their textbooks. Okay. Any other questions? Oh, it's $119 for the semester. Wow.
Yeah, that's why I was wondering, if you buy a used book and you said there's an access code with it, is that going to apply?
If you buy used, you won't get the access code, which won't give you the online assignments. But those online assignments are optional. They're extra credit in my class. In some classes, the instructor, the professor, may require them, in which case you don't have an option. You have to buy it new. So that's why I caution you on buying used books in anything other than my class. But in my class, I just need for you to have the material so that you can practice the assignments in the back of the book on your own in order to reinforce the lessons that I provide. Okay? Other questions? Well, that took up the most part of the hour. Okay, I will be online Wednesday morning. It is for your purposes only. So if you want to sleep in on Wednesday, you can. And we can discuss a later start if you want. It doesn't matter to me. I'll get up on Wednesday at 7:30. It doesn't matter. But if you guys, with online classes, if we don't have a conflict, if you don't have another course that is meeting at, say, 9:30 or 10:30, I'll be more than happy to schedule those. Just let me know. Send me a message. I'll do a poll in Blackboard and send it out to everybody so that people can select their preferred time to meet, and we'll do all that. But I'm available also beyond that. So if you want to send me a text, if you've got questions on the material that I just went over or on anything else,